We have a very interesting panel today. Good afternoon, all of you. I know we are coming in between your lunch, so we'll make it interesting. So before we begin talking about custody of digital assets, I will request the panel to introduce themselves and the services that they provide. Maybe we could start from Kanny, your side.
Starting from the far end, thank you for that. Hey, good afternoon, everyone. My name is Kenny Lee. I'm head of Singapore for OSL. We're mainly a brokerage business. We're a publicly listed company on the Hong Kong Stock Exchange. And we have the only, to date, thus far, license from Hong Kong SFC. So very highly regulated. We're best known in Singapore for running DBS's digital exchange. So nice partner of ours. And we also have a joint venture with Standard Chartered Bank. So very focused on the institutional side of the business.
Okay, my name is John. I'm the CEO of MEXC.com. We are the crypto exchange, and then one of our main features is that we list a lot of coins in our exchange. We are now expanding quite rapidly in Korea, Vietnam, and that's about our exchange.
Hi, I'm Rico, the founder and COO of Philcoin. Philcoin is the first philanthropic cryptocurrency in the industry. It was launched this year on MEXC and PancakeSwap. And we have been one of the earliest in the stage of promoting donor advice fund. And also we are a partner of the SDG Impact Fund, where we are actually a 501(c)(3) organization where people can donate to us and get tax deduction. So that's one of the major initiatives of our movement, where we are encouraging more and more NGOs and charitable organizations to partner with us to move them into the cryptocurrency and use cryptocurrency for donation purposes. Thank you.
Hi everyone, good afternoon. My name is Nizam, and I'm the founder and CEO of AsiaToken Fund Group. We are a venture builder and accelerator within the Web3 space. We help support early stage projects to launch and go to market, from end-to-end service, from marketing to secondary market management to technical building and stuff. So we are based in Singapore, and we have offices and teams in Thailand, Vietnam, Indonesia, India, Shanghai, and Los Angeles. Yeah, so thank you.
Yes, hello everyone. My name is Markus Thielen. I am the CIO for IDEG. IDEG is a digital asset manager. So we manage a little bit more than 10 funds for institutions. So everything from quant arbitrage to multi-tokens to single token strategy funds. We also have a sister company that's quite active in crypto venture capital with 300 investments in the crypto space, mostly focusing on Asia as well as the US. And we also have a sister company that's quite large in mining, mostly Bitcoin mining, but also mining as an infrastructure service, mostly based in Texas in the US.
Thank you, and a quick introduction about myself. We run a VC. We invest in blockchain projects. So as you can see, we have a very interesting panel from OTC to projects to asset management. So my first question to the panel will be, what according to you is the role of a crypto custodian, and why is it so important, especially in this time? I'll leave it to any one of you to take this question.
Maybe I'll start again, I guess, from the end. I guess the heart of being a custodian, it's a service. Holding your keys, managing your wallets is a very difficult task, even just for the normal person. So when you start scaling up and you realize how much money you're holding in your phone or in your wallets or in your multiple wallets, it becomes very difficult to manage. So as the crypto market grows, there's more adoption, there's more coins, there's more protocols, so it becomes very, very complex to manage. So at the heart of it, it's really a service that you're outsourcing. If you say that, the typical term, not your keys, not your coins. If you choose to leave your coins elsewhere, they're providing a service to you. And that service comes with a cost. I would say in the market today, that service is not fully loaded, so to speak. They're not charging fully for the services because holding your keys is a very important task. Once you lose it, once you lose your coins, you're like, wow, that's actually a huge loss on my part and a huge risk management error that we made. So a lot of exchanges invest a lot into security. They invest in a lot of operational overhead to ensure that this is well functioning. And the regulators are looking at that very heavily because of the fact that this is a very essential tenet to the growth of the crypto economy.
All right, great, thanks. My next question will be to Markus and Ken. Markus, you're an asset manager, crypto asset manager, and Ken, you're a VC. So when you decide on custodizing your assets, crypto assets, how do you decide, what is your criteria of selecting a custodian?
Yeah, of course, for us, because we manage institutional money, so that's part of the due diligence process that we're going through with our clients, and that we put, of course, the custodians through. We focus really on quality of the team. We're focusing on the size of the institutions and everything, and that's kind of primarily how we look at things. But I think when you look at 3, 4, 5 years ago, some exchanges were hacked, but I think the exchanges have also really increased a lot their security side, and I think what we're seeing more and more is that the traditional finance custodian, they're trying to get into the space because there's more demand from the institutional side. So we're having more and more discussions around this, and I think by end of the year, I think there will be, for example, some of the large custodians on the crypto side, they might be actually replaced with the traditional finance, custodians. So that's something that we look at.
Yeah. I think for me, managing a couple of projects and managing a couple of funds ourselves, I think what we look for in custodian is number one, of course, is the security. What's the security level of the custodian service, be it an exchange or be it a private custodian, whether it has been hacked or not before. And number two, make sure that the people and the people behind it are public, you know who they are, which company backed them, and of course, the next one will be insurance, whether they are insured, how much are they insured, whether is it enough to cover everyone. I think that's basic, but the rest will be somewhere along the lines of convenience. How convenient is it to do transaction? Because some custodian I know takes about 3 days to validate certain addresses, and every new addresses needs to be whitelisted. That takes few days. So as a project or as a business in crypto where we need to have a high volume transaction, we transact, mix payment, receive payment almost every day. So it becomes very inconvenient if we have to wait 1 day, 2 days, 3 days, or even a week for an address or wallet address to be whitelisted as well. So that's convenience. But again, also it depends on regulations as well, because some custodians are already regulated, like some have already received like government license, like in Singapore we call it the MEXC license. So those can be a plus point as well. But again, it brings down to the level of convenience. Like for me personally, if we have to wait 2-3 days to whitelist a certain wallet address just to make it a point of security, then there's no difference between the traditional finance as well. And we are in crypto space, we should be doing much better, much more efficient. So yeah, that's my take.
So Ken, just to add on to this, since you mentioned about the hassle of getting whitelisted, do you agree with me that more and more projects likes to self-custody rather than to custody with a third-party custodian?
Yes, definitely, because of convenience. As a projects, some projects have teams all over the world, decentralized. Transactions have to be done fast, especially making payments, paying your team salaries, paying marketing fees, or even paying exchange listings fees and whatever. So this makes it more convenient to move your tokens around. And of course, certain centralized custodians, you have to go through things like KYC and stuff, so it takes a lot of time. So in fact, I do know in certain countries, some of the project owners, or we call the institution, or some high net worth people, they are not able to go to pass through this KYC because like the government or the security exchange have already blacklisted them because they can't verify where the source of income, right? So yeah, it depends.
Yeah, I think for us, because as a regulated entity where you depend in Singapore on the MAS or in Hong Kong, On the SFC, really, I think you have to put forward, the custodian that you want to use, but they need to actually approve it, right? So that's why it really depends if you're, a VC or whatever, a retail investor or something. But I think from the institutional side, it's more and more dictated by the regulator what you can actually do and who you should use.
Sure. Next question will be to Rico and John. I know, John, you have your own exchange, so would like to really understand, as a centralized exchange, what are the challenges that you face? And Rico, you shared with me earlier that you have a non-custodial wallet. So how does that really kind of compare to centralized, which John has? So, and of course, the challenges that both of you are facing.
Well, I think the main challenges is imbalance between the usability and the safety. So the custodians in the exchange is just like the wall that was safeguarding about our clients' digital assets. So they have to come to agreement that they have to hand over their key to us so that we put their key on all the digital assets in a safe place. So this one, we create usability or user-friendly environment for the user to trade and then to store their crypto assets. At the same time, the crypto exchange is also facing the most a lot of attack. So we keep educating, we keep actually setting up the alert system to ensure our client, their assets was being protected properly. That's why we have to adapt the latest technology. Some of it is apparent to the user. Sometimes it's not hidden from the user, that we set up the safety measurement to show so that we can ensure the assets safety. So sometimes the user, they will feel that, hey, how come we have the KYC is so strict, and sometimes you have you will trigger some risk management assets that you are not allowed to withdraw the crypto. But this is actually to ensure that all the crypto the assets in the exchange was being well protected. It's actually the attack of the exchange seems in the past few years there is already have more than 40 or 30 or 40 over attack for the major exchange. So these are the reality the exchange have to face every day. I think another challenges is that in terms of the custodian services, very difficult for us to implement a bank level of kind of measurement to ensure, but we try to simulate similar to the bank. So in terms of the settlement, in terms of the custodian, all the ones, so that we can ensure that the customer on their side, they feel that the crypto asset was being protected. So that is what I want to share is about the challenge. The major challenges between how the user can able to use to trade, as well as how to protect against how we are able to protect the asset in a very, very secure way.
So to answer your question, Kishore, we have 1.7 billion people in our world that doesn't have a bank account, because 1.2 billion of them do not have a proper identity card to begin with. So that is one of the problems that we are facing on Earth. When it comes to charity, when it comes to philanthropy, the receiver of the donation in many third world countries or sanctioned countries do not have the capability of passing KYC to even trade crypto. And that is also another problem that we were trying to solve. And in Philcoin, we launched our own Phil app, which comes with a non-custodial wallet, so that anyone can create a wallet to receive Philcoin, to receive donation. And we were quite surprised over the pandemic, our biggest partners or communities that are using us and working with us are actually members from different faith groups, especially the Christians, churches, and their church members. Over the period of time, pandemic, many of them are not able to meet and conduct activities physically. And that was one of the challenges that most of the faith group were facing, not just the Christians. So as a philanthropic initiative, we were aiming to help them to solve this problem. That's number one. Number two, we also have launched a philanthropic chat, PhilChat, which is an encrypted peer-to-peer chatting software that was also helping them to solve this problem. In some countries, some of the politicians are also leaders in different faith groups. Their chats are always monitored, and if you let some government bodies monitor their transaction, they may get into some sort of, problem. So they wanted a safe place to actually have their communication being done, and that is why we launched Philcoin and PhilChat. Philcoin will be used as a utility to pay for some of the subscription functions for PhilChat. We can conduct up to 1,000 people, similar to a Zoom call, which is totally encrypted. We can also support up to 3 million super admin group for some of the communities to communicate among themselves, fully encrypted. And those are the services that we will be utilized the Philcoin. And of course, we launched the first donate to earn scheme in the whole world, where the more you donate, the more you earn. For every donor who donates using Philcoin, you will have a kickback of 1% of the Philcoin back to your wallet. So this is some of the things that, in terms of custody, I would say it's a matter of trust, of how you manage your money. Many of us are still using cash in certain countries. When I travel, I still need to go to ATM and get cash. And to us, when we travel with a cold wallet or a hot wallet or any wallet or even an exchange wallet, I think that is a choice where we can make, where we want to store it in a custodian, or how much money you want to store for your company using different service providers. I think the trust matter is very important, and this is why we need to have a firm regulations in the custody environment. Thank you.
And that's very interesting. I've heard of play to earn. Yesterday I was chatting with Ken. He has sleep to earn. And today I'm hearing donate to earn. Not sure what's going to come next. Okay, so my next question will be to Kanny. Kanny, my question is custody primarily an institutional play? Do retail investors need to care about it? I'll read it. Is custody primarily an institutional play? That means it's only for institutions, or do retail investors also need to care about it? Do they need to also custodize, or they can just do self-custody?
Sure, I would say that definitely yes. It's something that, again, I think it's underpriced from a retail perspective. Most retailers don't care because there's so many different providers, there's so many different wallets, there's so many different protocols, so it's very difficult, one person to manage it all. In an institution, it is a central tenet for them. This is a core sort of service. Is it something that, as an institution, that they want to do themselves, or do you want to outsource this? One of the things about custody is that not all custody players are built the same. Everyone uses the word custody. We offer custody. What does that actually mean? When you look at the exchanges that have went down, or the different businesses that have gone bankrupt over the last couple of years, one of the things that you'll find, and probably this happened in the more recent news, you might have read about this in Celsius and some of the lending platforms, is that these funds, although they're hit on the platform, they're actually commingled in a house accounts. So these type of T's and C's are something that you need to look at. Are these actually your funds, or does it belong to the platform or belong to the owner, which is actually the exchange? So that's a central thing that retailers need to look at. Second thing is that one of the structures that we have at OSL as a regulated company in Hong Kong is that we have client segregated accounts. So this is something that's very well known in the financial banking industry, to have client segregated accounts. That means if you go bankrupt, the funds that belong back to the customers cannot be touched by creditors. Very central tenet for that. So I think for us to grow, for custody of digital assets to grow, people need to understand the difference between the different custody providers and the structures that you go into. Why? Because we charge for it. This is a structure that costs a lot of money to run. So when people say, oh, well, when I custodize with you, it's expensive. Yes, it costs money for a reason. When someone says it's free for a reason.
Great, thank you very much. Let's talk a little bit about insurance. Markus, I'm sure as an asset manager, if you are going to be custodizing your assets, you would like to see some insurance at the custody side, as well as if in the event of something happens, how much of that portion of that insurance benefit comes to you. So do you look at, like, if the custodian is at least insured up to, let's say, X amount, let's say $1 billion, and if something happens, you're insured to up to at least, let's say, 10 million or 100 million. Do you look at these numbers Also, maybe I could ask John, is there some kind of a insurance mechanism where, like Binance have this SAFU, where they kind of make sure that the users' funds are insured? Do you have something similar at your exchange? So maybe I'll take Markus for this first and then John.
Yeah, I think insurance for us is extremely important, and let's say it might cost like 40 bips, and 40 bips is really not that much when you look at the volatility of crypto these days. But I think a point that was mentioned earlier, I think a key is also if the money is, or the tokens are really segregated, or if they're commingled. I mean, that's also for us like a very crucial evaluation criteria, because I think you have this, for example, also in the traditional finance, where some smaller hedge funds, they kind of commingle with the prime broker. And we saw this with Lehman Brothers when they went under. It took like years, or there was no chance to really return the money if you have it in a non-segregated commingled account. And I think here it's very important, I think, that you can clearly define and point to your ownership of these assets, that there's no doubt about it. And yes, segregated account, insurance, it's very important, because if the money or the tokens are lost, at least we won't, it's really not worth it when you look at the volatility and versus what you might pay for the insurance for it. So.
Yeah. John?
The answer to, we don't offer insurance services directly on our exchange, but we do have third-party partners who actually are offering the services. We also refer the client to them. So in the exchange cases like the USDT, we do have a client that were able to recover some of their losses if they actually insure on a stable coin. So I personally think that this insurance tech or these services is actually quite is raising, and then we are actually welcome more of these services that was available, and then we want to connect, and then we want to work with them, so that as a kind of service offer to our client as well. But as an exchange, we can't do the player as well, the referee at the same time, so we are not offering the insurance services directly. That's what
actually,
I think is
Kishore,
important.
Yeah. Sure. Yeah, so sorry if I could just jump in here. At OSL, we do offer insurance. Providing insurance, third-party insurance, meaning that it's not something that we cover out of our balance sheet. It's actually a third party that came in, and we were the first company in Asia to get commercial crime insurance on our vaults. Another important distinction, it's not a liability insurance. A lot of exchanges and a lot of firms offer the fact that we have insurance. What kind of insurance? Liability insurance. Okay, liability insurance covers this if you damage something. But if the funds are stolen in specifically that manner, whether it's collusion, whether it's cybercrime theft, it is covered by a third party. But think about what it takes to get insurance like this. What type of infrastructure, what type of questions are asked? We went through a blockchain audit by PwC. We went through a rigorous test of all disaster recovery plans. We went through disaster recovery scenarios where things like Mission Impossible things were coming up to the ceiling. If this happens, are you protected? So going through that rigor to offer this third-party insurance costs money. And when we say to our customers, insurance costs money, some of them understand. They're happy to pay for it. They realize what it takes to get there. Some people dismiss it and say, well, someone's offering better fees. Or, better yet, it's free. Because why? It's rehypothecated. They take your assets and they put it somewhere else. They stake it on another protocol to give you an earn, or they take that back to money. So a lot of firms are doing this in the last couple of years, I would say, and some of those funds are now lost. Right? So risk management, again, is very important when it comes to insurance.
Absolutely correct. Let's talk a little bit about regulation, guys. And I'll open this to everyone. What do you think are the regulatory developments in the crypto custody space, especially with regards to the regulators wanting to make sure that there's proper framework with custodians to address especially safeguards to protect the retail investors? So I'll open this to everyone on this panel. Maybe we'll start with Markus first.
Okay, I mean, I think you already have seen, for example, Hong Kong and Singapore, that the regulator is really trying to protect the retail investor. I mean, we as a firm are a bit more conservative. We're not trying to shoot at the lights. We're really trying to generate, conservative, meaning 10 to 20 to 30% returns per year, and not going for the 100%. And that's why we have the full package in terms of insurance, and we're paying probably a little bit more for a lot of things, and that's of course part of the fee structure. But I think in general, I think people are okay to paying higher fees because of the potential volatility of the upside. And I think we have already been seeing. Of course, now we have to wait with what the regulation is around stable coins, but I think the regulator is extremely active. When you just look what just happens, everything around Luna, Terra, and all these other things, and and with one Singaporean / Dubai fund, what has happened there. So I think a lot of stuff is happening. I think the regulator is very active. We're receiving some questions. They have done some due diligence, of course. Who are you using? Why are you using them? I think the regulator wants to learn, and I think big exchanges, I think Binance, I think also FTX, I think they're trying really to work with the regulator, because for them that's really a way to bring in the next round of big investors, meaning established pension funds and everything. So that's why I think the regulatory playing field needs to be set appropriately, and I think people, or regulators in Asia are looking a little bit for guidance from the US, and I think something is going to come out there probably the next 2 to 3 months, and I think early July there's maybe some announcement in the US already on stable.
Ken, you're into investing in a lot of projects, so do you want more of regulation or less of regulation?
I think nobody lacks the regulators, especially if you're in the crypto space. Definitely, that's the honest truth. But again, I think the landscape of crypto have evolved. I've came out in crypto since 2016. Until now, it's a different landscape. Like right now, I understand, I totally agree with, especially our Singapore government, why they want to regulate the crypto space, and why they mentioned that cryptocurrency is not suitable for retail investors, especially in Singapore. I think it's true, because back then in 2017, the amount of people, especially retail investors in crypto, is not as huge as now. Back in 2017, you go out on the streets, you talk to people about crypto, most of them, what is crypto? Is it Bitcoin and stuff? But now more and more people knows about crypto. You go out to the street, 1 in 5 will definitely know what crypto is and start investing. So, crypto is definitely very volatile itself. That's one factor. But another factor is there's a lot of scams. And even when you talk about custodian, when you talk about like centralized exchange, we've seen some who are like disappears. And especially recently there's several centralized exchanges that freeze withdrawals just because of the DeFi crash and stuff. So how are retail investors going to be protected? So I guess regulations, when the government taking care of retail investors is in the right direction. But I think with more new technologies that can be implemented to fix all these, to filter out all the scams, maintaining more security, I guess over time the regulators will be more flexible. Yeah.
Rico?
I think in the bear market situation, the best insurance is to learn how to hodl, buy and hodl, and wait and be patient. Do not always look at the graph and be emotional trader. That's best insurance, I would say. From my project point of view, we are also an investor, incubator, and accelerator in the space. Philcoin has been a wonderful journey where we met many leaders who are about giving, about helping people, and about making the world a better place. I think that has been a very rewarding journey for myself and the founders. One of my Singaporean founders is Dunstan Teo, one of the OG. And we have learned a lot in the bear market time. What should the project be doing? When we got listed into MEXC was also an interesting learning curve in the middle of Ukrainian and Russian war. And we were supposed to list in June, July time, but looking at the war was happening, we just decided to just go listing, and which is why we brought forward everything and went on listing. And it was a journey where we met even more people along the last couple of months to tell them that, look, you can also do charity and philanthropy using non-custodial wallet like Philcoin, Philapp, that actually can safeguard your assets as well. And if you miss the Bitcoin ride when Bitcoin was 10 cents, 20 cents, Philcoin is the next coin you should look into, because with adoption coming up in the philanthropy space, it's a trillion industry. Many people do not know that. And most of the NGOs, charities are charging enormous transaction fees or operation fees. Up to 60% of what you donated actually went to operations. Using blockchain and creating transparency in where the funds are being used, we are promoting to get charitable organizations to use Philcoin to pay their service vendors. So everything is already recorded on the ledger system of the blockchain. You don't need to inquire or do creative accounting to evade tax, so on and so forth. We are now working with many donors who are ultra high net worth individuals who wants to actually build schools, donate more of the assets, and we work with project management team to make sure everything is done in a transparent manner. So those are the initiatives that we are working on our end, and we do need a lot of custodian for these sort of services as well when there are big funds coming in. So I do reckon that the environment for cryptocurrency is evolving, especially in Singapore. I think it's moving in the right direction where it's getting tighter in certain operations where to protect the retail investors. At the same time, for project owners, they need to be educated in how to set up the legal structure entity in terms of how the funds are being used and create more transparency in the fund of usage.
I'll move on to the next question because of the lack of time. I'll circle back, John, if I have more time. So my next question will be, we've seen a lot of new custodians recently, and unfortunately with the crypto meltdown, mushrooming of DEXs, and more and more crypto traders are moving to derivatives. Do you think that there'll be no need for a custodian, especially when more and more people are moving towards owning their own cryptocurrency? Anyone can answer this question. Maybe either John or Kanny.
Yeah, maybe I'll start. I guess from a derivative standpoint, having a healthy derivatives market is good for crypto in general. Like, you are able to hedge your portfolio, you're able to take a long-term view of the direction of bet on the markets with less capital. Whether it helps custody or not, I think there are ample use cases for this to happen. For example, most of the derivatives are currently are in unregulated markets. If you want exposure to futures, you're not going to see a lot of depth and liquidity in a regulated crypto market. You're seeing that a lot more liquidity. Guys like Bybit who are here today, Deribit, these guys have a lot more liquidity. So in order to get access to that, you might have to use a custodian. You might want to place your collateral at a custodian and use their credit line to trade on those type of markets. But to get direct access, or if you find out that you're a fund manager, you ask them, hey, how are you trading? How are you hedging this portfolio? Oh, I trade on unregulated exchange. Oh, that's not very good risk management. That's not what I want to hear, right? But that's actually what is happening for most funds because there's no other option. Not because they don't want to trade, it's just that they don't have access or they don't want to pay for the fees.
Okay, maybe this question I'll address it to John. John, if someone wants to get a job in the crypto exchange space / custody space, what would you advise them if they want to get a job with MEXC?
Well, I think this is a very interesting question. I think we always welcome the good talents because this is very fierce competition, competitive industry. So we welcome everyone. And then, so that is a very open-minded mindset. But in terms of the custodians, I think it's more on the compliant because we want to do the 95% of the people's business instead of the early adopters. So being like it or not, we have to comply. And then we have to adopt all the regulation requirement. That's why I think we are actually welcome anyone, but we prefer that have experience in the banking, in the compliant area, so that you can bring a new way of doing the services in the crypto exchange.
All right, so we're out of time, but I'll happy to take one question from the audience, if anyone has, for the panel. Would anyone like to ask any question to the panel? None? All right, so in that case, thank you very much, everyone. You all can head for lunch now.
Thank you very much.